Hey everyone, welcome back to the channel. If you are new here, please hit subscribe and tap like so you do not miss my breakdowns of space tech, Earth observation, and disruptive data plays. Today, we are going to talk about Planet Labs, ticker PL. Planet is one of the leaders in monitoring the Earth from space with a constellation of more than 200 satellites imaging the planet every day. Like any space technology company, it has big opportunities and strong risks. I am going to explain what Planet does, what has been happening, what could go right, what could go wrong, and what I would watch if I were evaluating a small position. This is not financial advice, just information. Planet Labs operates a fleet of satellites dedicated to Earth observation. Its mission is to capture high-resolution multispectral images daily and transform those data into value for customers in government, defense, agriculture, energy, urban planning, environmental monitoring, and disaster response. The company designs small, low-cost satellites called Dove, launched as secondary payloads on other launches. It also acquired the SkySat constellation from Google to provide higher-resolution imagery. With this infrastructure, Planet can provide updated information about land use changes, agriculture monitoring, climate change, deforestation, urban development, and surface surveillance. The important part is its business model. Planet does not just sell images. It sells subscriptions, recurring data contracts, and analytic solutions. In recent presentations, it said that more than 90% of its contracts are recurring and multi-year. That is critical for revenue predictability. Planet reported total revenue of over $240 million with a high rate of recurring customer contracts. In its most recent quarter, Planet generated about $73 million in revenue, a growth of around 20% year-over-year driven by expansion of government contracts. It also reported its second consecutive quarter with positive free cash flow, which increases confidence in its short-term sustainability. Planet is also diversifying. It is moving into building dedicated satellites for customers. For example, it signed a contract of about $230 million with an Asia-Pacific customer to build Pelican satellites over 7 years. In that arrangement, the customer will have priority to direct the satellites in its area of interest, but Planet will retain rights to sell additional data to others. That strategy means Planet moves from being only a data provider to also a hardware provider, which can increase margins per customer. The stock has moved sharply. Planet has exceeded expectations on operating expenses, achieved efficiency, and closed contracts with sensitive government entities, which signals institutional trust. The stock price has risen more than 200% this year, reaching new 52-week highs near $11. That rally has been driven by better financial results and announcements that it is on track to generate free cash flow for the full fiscal year. However, after the earnings announcement, Planet also announced a $300 million senior convertible note offering, which raised concerns about potential dilution. That move shows that even though the company is improving its finances, it still depends on external funding. Let's look at strengths and advantages. The scale of its constellation is huge, with more than 200 active satellites allowing global daily coverage. That daily coverage gives advantage over providers that only pass every few days. Its low-cost satellite model lets it deploy many satellites more cheaply than traditional providers. High recurrence in institutional contracts with government and defense reduces exposure to the commercial cycle. Potential to move toward custom hardware and dedicated satellite contracts can mean more lucrative deals. Geopolitical positioning matters. Governments want more control over satellite data and less dependence on third parties, and Planet is well positioned to capture that demand. But the risks are considerable. Although revenue is growing, profitability is still not strong. The company still reports losses and depends on external financing. The convertible bond offering created concern about future dilution if the bonds convert to common shares. Competition in Earth observation is intense. Companies like Maxar, Airbus, and other space startups can offer similar services. Planet must differentiate on cost, data, and analytics. There is technological and maintenance risk. Operating a satellite constellation involves maintenance costs, replacement, failures, orbital degradation, and hardware calibration. There is regulatory risk. Satellites, geospatial data, and international operations involve national regulations, export controls, licenses, and usage restrictions. There is exposure to the government market. If governments cut space observation budgets, important contracts can be impacted. And there is high sensitivity of the stock price to news and expectations given that it is a growth company with speculative valuation. If I were considering a small stake in Planet, I would watch several things: quarterly reports of revenue, gross margin, and adjusted EBITDA to see if profitability improves. Free cash flow. Do they continue positive and become consistent? What happens with the convertible bonds? Conversions, dilution, conditions, and terms. New contracts for dedicated satellites or custom hardware. Renegotiations of government contracts and expansion of defense clients. Maintenance of the constellation. How many satellites are active? Failure rates, retirement rates. Progress in analytics and products. Not just raw data, but processed intelligence, machine learning, vertical applications. Market reactions to space news, geospatial regulation, or emerging competition. My view: Planet is one of those bets combining technology, scale, and rising demand for Earth data. The fact that it already shows growing revenue, good growth, institutional contracts, and consecutive positive free cash flow is a sign something is working. But it is not a sure path. The technical, financial, and regulatory risks can weigh heavily if execution falters. If I were investing, I would only use a portion of capital I can afford to lose. I would track operational milestones, confirmed contracts, and profitability before increasing exposure. To wrap up, Planet Labs, ticker PL, is not just a satellite company. It is a real-world data play. If it can dominate Earth observation efficiently and monetize those data at scale, it can be one of the standout names in commercial space. But if it stumbles with costs, dilution, or aggressive competition, the drop can be abrupt. Thanks for watching. If you liked this breakdown, hit like, subscribe, and comment what you think. Do you believe Planet will dominate the satellite data market or be overtaken by rivals? Stay curious, stay critical, and always do your own research. I am not a financial advisor, and nothing here is a recommendation to buy or sell any security.